By the way, the decision right now with Steve.
A somewhat divided Federal Reserve, leaving rates unchanged at the 4.25% to 4.5% range, with two governors dissenting as expected, Governor Bowman and Governor Waller, who preferred a quarter-point rate cut. It's the first time two governors have dissented since 1993. 9 votes were there to keep rates unchanged on hold, including the chair, 3 Fed governors, and 5 presidents. That's to say the dissenters didn't really get too much additional support over the 6 weeks they've argued for this cut. Swings in exports, the statement says, continue to affect the data. Growth moderated in the first half of the year, they note, which is from data we got this morning. And here's the line that didn't change, that people thought might give a dovish signal. It does not. It simply says uncertainty about the economic outlook remains elevated. That's the same line they used last time. They actually removed a word where last time they said uncertainty has diminished but remains elevated. They took out the diminished part. So they still see high uncertainty. That was an area where if there was a change that was going to maybe signal a dovish move or a dovish move ahead, that would have changed. It did not. The Fed said inflation remains somewhat elevated. Same language as last time. Unemployment is low. The labor market is solid, the statement says. And the committee is attentive to risks on both sides of the mandate. So we'll wait to hear the press conference, Brian. But if there's a hint that the rate cut is coming imminently in September, that's not in the statement that I could read.
Okay, so Steve, go into this dissent for the first time since 1993. We got two Fed governors, Chris Waller and Michelle Bowman, dissenting. They wanted to cut by 0.25%. How, if at all, relevant is that to anything going forward?
Well, you know, unfortunately, there's not a really great track record. I have a little quip that I've used over the years, which is that dissenters can lead the way or lead you astray. I have seen both situations where the dissenters told us what was going to happen next, but also places where they've been on the wrong side of where things are going. So it's a little hard to see what's happening. I think what I would look at, Brian, is the data. The Fed gets 2 months of data between now and the next meeting, 2 months of inflation data, that is, 2 months of employment data. And so that's going to tell us if we have this continued low inflation, this idea that you have continued tariff inflation, but other parts of the economy are not showing it, such as the total number continues to be well behaved, the Fed could cut. And again, if there is a serious move downward in the job market, I think the Fed would cut again. But right now, I think you have to wait for the data, and it's really hard to front run all of this. I'll wait to see the percentages when we're done here. I can look them up and see where we're at in terms of the probabilities. But they were around 65%, which is confident, but not overly so about a September rate cut in the market.